All right, everybody, get ready. Because today we are taking a deep dive into Bitcoin ETFs.
Oh, yeah.
And, especially what BlackRock jumping into the ring might actually mean
Right.
for the future of, well,
Yeah.
money, basically.
Sure. And it's interesting. You have to remember that Bitcoin itself has had this wild ride.
Totally.
Went from this niche thing that only, tech people in their basements were talking about.
Right, exactly.
And now you've got these giants, these huge GE institutions like BlackRock saying, hey, we want in on this.
Yeah, exactly.
Yeah.
It's not every day that a company known for playing it safe, for being super traditional in their investments,
Right, for sure.
suddenly decides to dive headfirst into, the world of crypto. So for those of our listeners who maybe aren't as familiar with all the crypto lingo, what is this BlackRock Bitcoin ETF approval? What does that actually tell us about where things are headed?
It's a signal, and it's a big one. Because for the longest time, the SEC, all the regulators, they've been hesitant.
Yeah. They've been very hesitant.
Very hesitant, very unsure about these ETFs. But this recent wave of approvals,
right,
it really does point to a shift. They're finally starting to accept Bitcoin as this serious asset.
So it's not just a fad for the tech folks anymore.
Not at all. Not even close. What we're seeing now is institutional validation. It's they're saying, okay, Bitcoin is a major player in this game.
Okay, so BlackRock's officially in the game now.
They're in it.
And there are people out there saying this could be huge E for Bitcoin, like a total gold rush, but for the digital age.
Yeah, I've heard that.
There's even talk about trillions, literally trillions of dollars.
Trillions with a T.
From baby boomers alone, potentially flowing into Bitcoin. I mean, that's just, it's mind-boggling.
That $19 trillion figure gets thrown around a lot, and it's often tied to this idea that as boomers inherit wealth, they might want to diversify, not put all their eggs in one basket.
Right, so it's like this generational wealth transfer with Bitcoin as the surprise beneficiary. But do we actually think that much money could actually flow into Bitcoin? And what would that even look like?
It's a really compelling idea.
It is.
Even if a fraction of that amount went into Bitcoin, I mean, the impact on the price would be huge.
Right, because we've already seen how Bitcoin reacts to these major investments.
For sure.
This would be on another level.
It'd be a whole other ballgame.
Okay, so let's talk about these potential price surges for a second, because we've got people like Cathie Wood, who are predicting that Bitcoin could jump 30 times its current value.
It's a bold statement.
It is. It is. And then on top of that, you've got Elon Musk,
who never shies away from a bold statement.
Never. Who's over here saying it could hit $1 million per coin.
Wow.
So, I mean, are these predictions based on anything? Are these grounded in reality?
Well, I'm not in the business of predicting the future.
Right.
Especially with something as volatile as crypto.
Yeah, it's unpredictable.
But there are some historical trends to consider here, for example.
Okay.
Bitcoin goes through these halving events.
Yeah.
And it happens about every 4 years.
Okay. And just to remind everyone, that means the rate at which new Bitcoins are created, it gets cut in half.
Cut in half, which means less Bitcoin available.
Less supply, higher demand. Higher price, basic economics.
Exactly. And every time this halving thing has happened, we've seen these huge price surges.
Really?
So with the next one predicted for 2024, some analysts think, well, maybe history's going to repeat itself.
Okay, so it's not just about the halving, though, right? There's this other layer, this global liquidity thing that's happening at the same time.
You're absolutely right. You can't ignore that, because when more money is flowing through the global economy, like with stimulus packages or loose monetary policy, people have more to invest. And some of that's going to go into riskier things.
Like crypto?
Like Bitcoin.
Yeah.
Exactly. And we saw this happen during the pandemic.
Oh, interesting.
So, more money sloshing around, Bitcoin tends to benefit.
So lots of potential upsides here.
Lots of potential.
Lots of hype, maybe some historical reasons to be optimistic. But I think we need to talk about the other side of this.
Okay.
Because not everyone is convinced that BlackRock, galloping into the crypto sunset is a good thing.
Right. And there are some valid concerns.
Right.
About whether this is actually as good as it sounds.
I keep thinking about something you said earlier about like the whole point of Bitcoin being that it's decentralized.
Right.
That no one entity controls it.
It's the Wild West of finance.
Right, exactly. But then you have someone like BlackRock coming in.
Yeah.
This massive institution. Doesn't that change things?
That is the question, isn't it? Arthur Hayes, and he's, not just anybody, he co-founded BitMEX.
Right.
He's been pretty loud about his concerns.
Yeah, I've heard his name.
He even said that BlackRock getting involved could, get this, destroy Bitcoin.
Okay, destroy seems a little extreme, even for crypto.
Yeah.
But like, what's the thinking there? What's the worst case scenario he's painting?
It all comes down to control, right?
Okay.
And what happens when too much control ends up in the wrong hands.
Right.
And remember, with Bitcoin, one of its biggest strengths, I mean, that's the whole idea, is that it's decentralized.
Yeah.
It's spread out across this whole network of computers.
So no single point of failure.
Exactly. And those computers are run by miners.
Right.
And they're constantly verifying transactions, adding them to the blockchain.
Which is what makes it secure.
That's the whole point.
Yeah.
Keeps it trustworthy.
Okay. So it's like this huge global game of tug of war where no one can just grab all the rope.
That's a good way to put it.
Okay.
But what Hayes is saying is, what if BlackRock, through its ETF, accumulates so much Bitcoin that they basically gain too much influence?
Yeah, because they would have so much of it.
And don't forget about the miners for a second. They need electricity.
Right, and a lot of it, I've seen the charts comparing their energy use to, like, entire countries.
It's crazy, right? Massive amount of power.
Yeah.
But the thing is, they're incentivized to do it.
Right. They get Bitcoin as a reward.
For keeping the network secure, for doing all that work. But here's the catch.
What's the catch?
If the price of Bitcoin crashes, mining, it stops being profitable.
So they shut down.
Many would have to, which makes the network vulnerable.
So it's this balance between the price of Bitcoin,
the cost of mining,
security of the whole system.
Exactly.
Okay.
And that is where Hayes' concern about BlackRock comes in.
Okay.
He's worried that if they suddenly sold a ton of Bitcoin,
like a fire sale,
it could tank the price, miners get squeezed, and the network's left wide open.
Okay, I see why people are nervous.
Yeah.
But on the flip side, BlackRock's not really known for making, like, impulsive moves.
True. Very true.
Like, they're not in the business of just burning it all down for a quick buck.
They tend to think long-term, definitely.
So what's, like, the takeaway here?
I think even the fact that this concern exists, it just goes to show how complicated this all is,
Totally.
Bringing these institutions into a space that was built on the idea of, like,
decentralization.
Exactly. It's messy.
It's like we're at this weird crossroads.
We are. We really are.
Because on the one hand, we've got all this potential for growth, for like trillions of dollars to flow into Bitcoin.
That would change everything.
But then there's this risk that by bringing in these institutions,
like the BlackRocks of the world,
we might actually undermine the thing that made Bitcoin special in the first place.
You said it, and that leads us right into the bigger question.
Yeah.
What does this mean for the average person?
Right, because this isn't just theoretical.
Not at all.
There are real people who are hearing all this, seeing the headlines,
trying to figure out if they should buy Bitcoin, sell it, or just, like, hide under a rock.
Yeah.
And I think the most important thing is don't panic.
Okay.
Don't get swept up in the hype. Don't listen to, like, every hot take on Twitter.
Right, because it's your money.
It is your financial future. You can't just blindly follow the Elon Musks of the world.
Okay, so no more blindly following Elon Musk?
Maybe not when it comes to your life savings,
Good advice, but seriously.
Yeah.
Where do we even begin with this?
You have to start with yourself, honestly.
Okay.
What's your risk tolerance? What are you hoping to achieve? And then you can figure out if Bitcoin even fits into that.
Because it's not just about, like, jumping on the latest investment trend.
It's bigger than that.
This is about understanding a fundamental shift.
In how we think about money, exactly.
Yeah, like a move away from those traditional systems towards something totally new.
It's challenging the status quo.
It really is.
And with any revolution, there are winners and there are losers.
True.
It's a gamble, for sure, but knowledge is power in these situations.
It really is.
The more you know about what's happening,
right,
the better you'll be able to handle all of this, make good decisions.
So where should people even start? For someone who's not, like, a financial expert, where do they even begin to wrap their heads around all of this?
It's all about asking good questions.
Okay.
Challenge what you think. Be open to new ideas.
I like that.
For example, have you ever really thought about what money even is?
That's a good question.
What gives it value?
Because we're used to, like, governments and banks.
Exactly. They tell us what our money's worth.
Right.
But that's what Bitcoin and crypto challenge.
Okay.
It's this decentralized alternative where control is shared, not like hoarded by a select few.
So it's a potential power shift.
It is a redistribution of control.
Exciting and terrifying at the same time.
I get it. Change can be scary. But think about it.
Yeah.
Every major tech advancement, the printing press, telephones, the internet, all of it brought uncertainty.
And crypto feels like it's like right on the edge of being one of those big moments.
Totally. And it's not even just about the technology itself, right? It's more about the questions it makes us ask.
About money, about value, yeah.
Like, we're so used to these systems, but someone made them up.
Sure.
We can reimagine them.
We can. And that's kind of exciting that we're having this conversation at all.
It is. It's a huge opportunity.
It is, but it feels almost impossible to compare. Like, how do you compare Bitcoin to, like, gold?
Right.
To, you know, the dollar.
Currency, yeah.
And, like, make sense of it all.
Well, there's this chart. It's from Investopedia.
Okay.
And it breaks down, like, the characteristics of each one.
Okay. I like that.
It's a good place to start.
So we've got gold, the classic. Everyone knows gold is safe. It's been valuable forever.
Right, the safe haven.
And there's fiat currency, which is what we use every day, but it's, you know.
It's prone to inflation.
Exactly. And then crypto comes in, and it's this whole other thing.
With its own pros and cons, for sure.
So how do they all, like, play together?
Well, gold has that scarcity thing going for it.
Right.
Which people love when things are uncertain.
When the economy is shaky, everyone wants gold.
Exactly. Then fiat currency, it's convenient.
It is. It's easy.
But the government controls it.
Right, ultimately.
And then crypto, it's like a mix of both.
Okay, interesting. So it's trying to be
a store of value, like gold, but also something you use for transactions, like the dollar.
But without anyone controlling it.
And that's the key difference right there.
Decentralization.
Exactly. It's about shifting power.
Instead of everything being controlled by, like, the same old institutions.
It's more democratic in a way.
But that comes with its own set of challenges, too.
For sure. Not saying it's perfect, but it's definitely interesting.
It's fascinating. We're just scratching the surface here, but this has been a lot to process.
And that's the beauty of it, right?
It is. There's no easy answers.
It's just a lot of possibilities.
A lot to learn. So for our listeners, where should they go from here if they want to, like, keep going down this rabbit hole?
Don't just take our word for it, you know?
Read everything.
Read everything. Look at Bitcoin, blockchain, the future of finance, see what everyone's saying.
I love that. Look at all sides.
The good, the bad, the ugly. Challenge what you think you know.
So much good stuff here. I think the biggest takeaway for me is it's not even just about, like, will Bitcoin be worth more in 5 years or 10 years?
It's way bigger than that.
It's about who gets to decide what's valuable.
Who gets to play the game.
Yeah, and how do we make it fair?
Especially as money becomes more and more digital.
Exactly. That's the future we're walking into.
And that's a conversation that's just getting started.
This has been amazing. Thank you so much for, like, diving into all this with me.
Anytime. It's been fun.
For everyone listening, thank you for joining us for this deep dive into Bitcoin ETFs and, like, the future of everything, basically. We'll be back next time with another deep dive. But until then, keep learning, keep questioning, and, you know, maybe buy a book or two. We'll see you all next time.